Again, welcome and thank you for joining this panel discussion where we plan to discuss innovations in regulatory and technological aspects to address key challenges that both regulators and service providers face in channeling and delivering financial services to the unbanked and the financially excluded. We'll focus on the AML-CFT rules, the acronyms for anti-money laundering and the combating of financing of terrorism, for those who don't know, and the key challenges in identity management and risks related to these aspects. I'm both honored and pleased to introduce our panelists who came all the way from India, the US, and Brazil to be with us today and share their extensive experiences in this field. I would like first to welcome Ms. Denise Diaz, who came from Brazil. She is a supervisor in the Central Bank of Brazil, dedicated to market conduct and consumer protection supervision. She leads the project to redesign conduct supervision department and align it to international good practices. Before that, Denise was the regional manager for Latin America and the Caribbean at CGAP, and she also worked as an independent consultant specializing in branchless banking and prudential regulation and supervision. By the way, Denise came from Brazil, leaving the World Cup finals just to be here with us. So, obrigado.
Now? Yes. So good morning again. As Allah said, I'm missing some matches of the World Cup. But the good thing is that we're gonna win from the Mexicans tonight. So they're gonna lose. That's why he was nervous, because he knows what's coming. Anyway, so I'm gonna talk about, I'm gonna give a brief presentation because I'm not gonna go into the details of the regulations. But I'm going to go through some basics of the AML-CFT regulation. So first of all, we need to remember why is risky not to know your client. Why do regulators care about this? There are the two basic things. They're in the names of the types of regulation. One is money laundering. The other one is terrorism financing. So everybody knows what money laundering is. It's really making licit something that is illicit. So terrorism financing is always more difficult to tackle through regulation, but we also try. So how do we try to address these two risks through regulation? In my view, these are the three things that we look at. Is first asking for information from the clients, limiting the transactions of the clients, and monitoring the client's transactions. And there are many types of requirements that you can put in the regulation to achieve those three objectives. The most common ones are, and the most basic ones are, to ask for the identification of the client and verify that identification of the client. It sounds simple, right? But sometimes it's not, and sometimes it can really, really kill a business, especially for financial inclusion, if you don't take care of what that means in practice in your country. And that is true in Brazil too. So, and limiting the transactions, this is a very, very important point, the central one. You can limit the number of transactions, you can limit the value of each transaction, you can limit the average balance in an account of a client. So you can do all this in a regulation. And then the monitoring. After you acquire the client, the regulation sometimes asks you to monitor the transactions of your client against the profile that you built for the client. So this is what we do in the regulation thing. And you know the devil is in the details. This looks very nice. And then you don't know in practice when you're writing the regulation how this is going to affect the market, and then everybody complains that your regulation is bad, that the value that you put there for maximum value is not right, and then that people in the area of the country don't have that type of identification that is written in the regulation. So we have a lot of problems. I'm going to talk about, so this is for us to remember the challenges, because we are talking about innovation, financial access. How do you do financial access in general? And this is the reason why we're here. We're talking about innovation, technology. Usually you're talking about agents. It doesn't really get to the point yet in the world that you have no need to have agents. You need cash. You still need cash. Even if you deal with mobile banking, even if you deal with electronic money and non-banks, you still need cash in and cash out, so you're going to have agents in every model with few exceptions. So this is an agent in Brazil. It's a very common one. It's the lottery house. And then you have remote transactions. So this is very new in some countries. Remote transactions can be an internet-based, mobile phone-based. It can be telephone, really calling a person and talking to someone. And then you have the problem in some countries of ID. So you don't have ID systems, or you do have an ID system, but it's very easy to fake IDs in a country. That might be true in Brazil, for example, for some types of ID. So this is financial access. You have to deal with these things. So how do you balance that thing here? These three objectives of a regulation with the financial access objectives that you need innovation, this type. So one way to reach that balance is creating lower risk accounts. I mentioned in the earlier panel, a lot of countries create low risk accounts. So what is that? I'm going to give you an example of 3 countries, but not in the details, but I want to stress the difference between them. So Brazil came with something called simplified accounts. But basically 2 banks open a lot of these accounts. They have around 12 million or a little bit more of 12 million of these basic accounts. It's a big number, but it's not that big even for Brazil, because compared to the other accounts, and there are some double counting in those accounts. So we have 12 million of those simplified accounts. There is a simplified opening process. The ID that is required for this can even be delayed. You know, the ID checking and the ID requirement can be delayed up to 6 months until the client can get an ID. So it's a very, it has limitations on the values that you can transact in the account. The problem is that the central bank mixed 2 regulatory objectives. So they actually, the central bank was regulating also the prices of this, the transaction fees that the banks charge from the clients. So what happened was the market didn't like it, the clients didn't like it, because we're just mixing too many things in one regulation. So this is the failure case in Brazil. We do have 12 million, but they are mostly inactive. The new thing that we're trying in Brazil is what we call payment accounts. We still have the simplified accounts. We don't have something that I'm going to show that Colombia has, but we created a new type of account, which is payment accounts. Non-banks and banks can have payment accounts. They have limitations on the average balance. They also have limitations on the types of transactions that you can do. For example, you cannot do international remittances with these payment accounts, but you can do a lot in the domestic arena. This is new, and then this has the downside that it's not considered a bank deposit account. So it doesn't have deposit insurance, but on the other hand, it does have 100% backing of the deposit in a banking institution. So the provider of those accounts needs to back everything 100% in a commercial bank. So this is usually used for e-money accounts, for example. let's see the case of Colombia. I think Colombia is the best example here in these three countries. Colombia, instead of creating a new account, Colombia said, okay, we have those requirements for KYC for those types of accounts in our country, and then we're going to make an exception for accounts up to certain value, monthly transaction value. We're going to exempt the KYC requirement. Colombia even has the possibility of opening accounts totally remotely. So it's a very interesting way to deal with it. It's simpler, it's easy for the market to understand, and it's simpler for the market to create new types of products based on this regulation. Let's see now the case of Mexico. Mexico is the most complex case here. Next slide, please. Okay, it's just a little bit slow. I don't know if you can see that. So Mexico is always the most complex regulation that you can have, always. So they came with 4 types of accounts. From the left to right, you have the lowest risk on the left, the highest risk on the right. Consequently, you have the lowest KYC requirement on the left and the highest KYC requirement on the right. It's very clever, and it's actually very interesting. We couldn't do that in Brazil. It's just too complicated because you have names of accounts. If you talk to people in the market there, they mix the names up, and it gets very confusing because the central bank has another regulation that mix with these ones that come from the banking commission. But this is a very clever way to deal with risk-based KYC, and also to comply with FATF requirements. FATF says you need to have risk-based requirements, so show me your risk-based. This is the risk-based. And Mexico even, they were studying the relationship of these limitations, of the value limitations on the average income level and the average income level in different segments of the society to show that this thing makes sense. So these are 3 examples. I don't want to go into the details, but we can talk about those later. But the message is, what is the best one? I think it's not which one is the best, although I like Colombia best, but limiting value is really powerful. Don't forget that. Limiting value does a lot. So if you rely on that limitation of the value, and we're talking about very low need for value on the lowest income level. So people transact a lot, but they transact very limited transactions. So rely on that thing to really limit the AML risk. Probably the financing of terrorism is more complicated, but you already cut a lot of your risk if you go to the limiting value. And then you may limit the functionality of the account if you relax too much on the KYC requirements, such as Mexico did for the anonymous account. So they relaxed a lot, they allowed anonymous account, but then they limited a lot the functionalities. And then do not mix regulatory objectives, such as Brazil. We mixed something that we wanted free accounts for the people, but then we mixed that with the objective of limiting AML risk. That doesn't work. So every country that I see go and visit and see that they are trying to do the same thing, I said, do not do that, because Brazil tried, India tried, South Africa tried. It doesn't work. So separate the objectives. If you want free accounts, you create the free accounts. If you want limiting AML risk, you create enabling environment for the market. And then I'll just leave the challenges here because I think I want my colleagues to answer those questions. They are the ones who do stuff. I just, as you were saying, I just stop them from doing things. But anyway, I know the risks are there, and these are the challenges in implementing AML regulations. And the last message is this one. Know better if you don't limit all the risk. You're not going to eliminate all the risk of AML. Just remember that the more you have inside your traceable system, the more you have inside the system, the better. So cash is the first enemy in case of AML. So anything is better for me than having the cash. So if it's not perfect AML regulation, that's still better than having the informal market. Thank you very much.
Thank you, Denise, very much. One question to the audience, and I need to ask for a vote. So if, as Denise explained about the unanimous account that you can open in the case of Brazil, or so what do you think of this type of account? An account that a person can open at home using his or her mobile phone without having to present his ID, his or her ID, and with a limited balance amount, let's say $200 or $100. So anyone in the room who thinks that this is a bad idea, could you please raise your hand? Did you get the question, or? So can you explain?
No, I guess it's a brilliant idea. I think it's a very good idea. But however, you will need to have more precautious in how you're going to manage the customer identification, the verification, and the authentication of the transaction, and so forth.
Ahmed, please.
Actually, the idea of anonymous account is there, but you have to put it in its right position. Again, not to mix objectives. So anonymous account means that this account will not be reused regularly. It's something that can be used once or twice. That's it. And based on this, our regulations normally allows for opening a prepaid card account that is anonymous with a limit of £1,000, but it cannot be paid in cash. It has to be paid through point of sale at merchant size. So here you have limitation not only on the amount, but as well on the way of usage. And this is, by the way, not far from the schemes regulations. It's not that far. I mean, MasterCard and Visa regulations. So here the bank does not know anything about the cardholder, but at the same time you limit the usage at the merchants only. Going up for frequently used or cards or mobile tool that can be reused. In this case, we identify between accounts where the agent has done the KYC and accounts where the bank has done the KYC. So again, we play with the limit, we play with the frequency of usage or limits on I can say monthly limits or so, and the limit of the account itself, the maximum amount that can be deposited in the account. So here again, it's a matter of how to proportionality or to proportionate the risk to the type of the account.
That's the point that you mentioned about the central banks of Egypt approving a prepaid card that's anonymous, and at the same time it's restricted to point of sale transactions only. So my question would be, why would it be difficult for allowing cash out of these cards at points where the receiver or the person who wants to cash out these funds would be identified and would be required to actually present an identity acceptable for KYC measures. So this way, you open this account, and at a later stage, you would do the KYC measures to prove that.
Actually, it's a matter of normally when you put regulations, you put general regulations. You don't put regulation that is very specific on a certain product. So it's a matter of if for example, if you want it to be reused even if the card is not embossed, I mean the name of the holder is not on the card, but at least the bank should know the name. In this case, we allow for this. I mean we can have a card that does not have the card holder name, but the bank itself has the name of the card holder through the agent, not through the and doing so, we allow for the cash in, cash out of the card. So it's a matter of, I mean, tilting the product based on, and it's a small tilting. It's not something that's difficult.
Thank you. Allow me to move on to Abhishek Sinha, who is now the co-founder and CEO of Echo India Financial Services, a mobile money network who is serving currently over 3 million customers. Abhishek started his career with an Indian IT major and worked for their telecom division for a couple of years. And in 2002, he co-founded 6D Telecom Solutions, a telecom value-added services company. After that, he exited 6D in early 2007 to co-found Echo in pursuit to promote mobile phones as a financial identity with simplicity of user experience while still ensuring secure transactions. So I would like to ask Abhishek a question about your experience and the key challenges that you faced, especially in outsourcing agents and third parties in KYC measures.
Oh, absolutely. The risks of outsourcing it to the agent is absolutely real. We do this day in and day out. And we over a period of time have understood that we have got to become smarter, because if we become very prescriptive on the front end to say that don't open accounts, as it is, the regulations are complex. But now some portions of the regulations allow for certain transactions, certain value to get transacted without KYC. But I don't, and I'll give you a very good example. One day we got a phone call from the police saying that we want details of a transaction because some drugs were transacted and the payment was done through Echo. So we were not party to the crime which got committed, but police wanted information. And that was an eye-opener, because what we realized is that a same account received 20 lakh rupees, or say close to 50,000 US dollars, from 2-3 different agents of ours using different mobiles. So in Echo we use cell phones. Now if our systems would have been smarter, we would have detected this, but we didn't. We reacted because this got highlighted to us. And now we are building systems where you know, so what we essentially capture by the process of the transaction is the sender's mobile number, the beneficiary's mobile number and the account number, and the agent. We've already done very strong KYC for the agent. One of the parties, either the sending party or the receiving party, has to be a bank account, which is a KYC customer. So if the systems in the back end are smart, then a lot can be captured about the sender, the beneficiary, the agent. And if you start to look at the patterns, you can understand whether these transactions are actually violating AML norms or not. So whatever are the thresholds, which the regulations very clearly define, that these are the AML thresholds, can absolutely get captured. Also, what we have learned, and we are continually learning, is that we need to look at technology a lot more disruptively. You have Android now available in the market. It has suddenly brought down the cost of smartphones down big time. And we saw that, okay, there isn't a lot of penetration of Android at the customer level, but there is significant penetration of Android at the agent level. The beauty of Android is that it can capture GPS. You can get your location information. So, and Android, and we are now intrigued by the the power of this platform to say that there are a lot of senses which this platform can capture, you know. And some of the things which come very naturally to such a platform is, say, location or images or pictures. And you could tag them both. So by just looking at transactional data, and as Denise pointed out, it is very important to let the transactions happen. If the regulations become very limiting, then the guys who have bad intent will, as it is, surpass the system. The system has got to become very convenient for transactions to happen, such that it even encourages the bad guys to do the transactions because it's very easy and convenient to do. But the back-end systems have to become smarter to look at the patterns and say, this transaction should not have happened. Or if this transaction has happened, then it must get reported to the required agencies. But when you disallow a transaction to happen, there is no way you can capture the guy. You can capture the wrong guy. So it's very important to let the transactions happen. Very important to look at technology. And in India, apart from Android, the identity program, unique identity program, is a big program. It has already enrolled over 600 million customers. So these enablers need to be much more disruptively used to address KYC.
Yes, thank you. It's a very important point that actually also Denise pointed out and stressed on the importance of. It's much better putting all these transactions within the system and dealing with these risks and just keeping them outside the system, outside monitoring, outside of the monitoring of the supervisory and regulatory bodies, and just being outside the formal financial system. So we heard it from the regulator's point of view, from the service provider's point of view. Now we want to hear it from the innovative sector, who actually works on the latest technological developments and innovations, who helps in dealing with these challenges and risks. So allow me, last but not least, to welcome Mr. Hashim Banerjee, who came from the US, Colorado. Thank you for joining us. And Hashim has an extensive experience in product development and delivery that has yielded a dozen product patents and a track record of delivering value to enterprise seeking market leadership. In 2011, Hashim founded ID Mission, bringing cloud-based smart process solutions that enable seamless integration of identity management and payments into customized smart processes for the enterprise of the future. So I would like to ask you to tell us about what's happening today and what are you expecting in the near future. Thank you.
Thank you, Ala. I'm going to talk a little bit about the technology and what is possible in KYC. What does KYC mean from the aspects of what data can be collected from customers and what can really happen today. Just a brief introduction on myself and my company. ID Mission was founded in 2011 for the sole purpose of being able to validate identity in real time using technologies that are modern and relevant to today's world, right? So cloud, mobile, cloud, and analytics. That's really what as our tools. And today we are deployed in about a dozen countries around the world, doing about 35 to 40,000 KYCs every day. Just a little bit of theory before we get into the fun aspects of KYC. Theoretically, there are three factors that are said to be factors of identity. There is something that you know, like your name, your address, your date of birth, your password, your PIN, that you can reveal and can be verified to establish your identity. There is something that you have, like a card, a credit card, or a PIN, or a key card, or a cell phone. These are physical things that you have with you, which can also be used to determine who you are. And finally, there's something that you are, which is a direct measure of you as a human being, which is a biometric, a fingerprint or an iris scan, and things like that. Identity authentication systems can use one of these three factors or combinations of these three factors. So for example, an ATM, the only way you can transact on an ATM is to have an ATM card, something you have, you swipe it, and then you enter a PIN, which is something you know. So the confusion needs to be clear that by asking for two of the same factors, you're not enhancing security. You have to ask for two different factors of identity, right, to make a more secure system. So identity is something that people have been thinking about for ever since humanity became self-conscious. We started giving ourselves names. We started drawing paintings of ourselves on cave walls and things like that. Literature, there are hundreds of classics that have been written about how to establish identity. Movies, Hollywood has made many movies. So I'm going to show you a little clip from a movie, a favorite of mine, in the use of technology for various things. So Steven Spielberg made this movie. It's called The Minority Report. It was made in 2002, and he actually shut up in a room. He brought the foremost experts in the world in architecture, the foremost experts in banking, the foremost experts in robotics, computer science, locked them up in a room for 4 days and said that, what will the world look like in 2054? And then they made the movie, right? The interesting thing about the movie is that it had tremendous aspects of KYC in it. And what these experts imagine KYC to be in 2054. So I'm just going to let us watch this clip. It's only about 20 seconds, and then we can talk a little bit more about it.
A road diverges in the desert. Lexus. The road you're on, John Anderton, is the one less traveled. Make sure you are.
Good evening. You can move the old-fashioned John Anderton Twilight Styles provides gourmet cuisine. John Anderton. You can use a Guinness right about now. Stressed out, John Anderton.
Escape from it all, Harrison. Get away, John Anderton. Forget your troubles.
So it can be a bit scary, right? I mean, but so KYC in this case, in this clip, is being used exclusively for the purpose of identification and relevant marketing and product marketing based on that identification in the first part of the clip. In the second part of the clip, your KYC, your eyes, are being used to determine whether or not you have a ticket to get onto a train, right? So the idea is instant, real-time identification. Once this identification is done, you can then add on to it a marketing service or an onboarding service or whatever it is. And classic, I mean, this is what we all want to use KYC for. When we talk about KYC and financial inclusion, what we are saying is that figure out who this guy is in a non-reputable way, right? So that he can't later on say, I wasn't this guy. Identify him and then enable him access to a service. So Steven Spielberg's version of it is very glamorous and very sexy, but it's not quite, we are not quite there yet. Of course, we are only in 2014. We're still 40 years away from 2054, right? So we still have time to go. But eventually, this is what it'll be, iris scanning in a second. However, biometric scanning, and Abhishek mentioned this before, is already quite widely prevalent. Biometrics are used in many countries around the world. I think the most dramatic use of biometric is in India, with the Unique Identification Authority of India, which has enrolled over 600 million people using fingerprints, photographs of their face, iris scans, similar to what you just saw, and the name, address, and other demographics. So what I'm going to show you next is another short video clip, but this is of a real product, a product that exists today that you can then use to determine, remember the three factors of identity, right? Something you have, something you know, and something you are. So here we're talking about something that you are. So here's the next clip.
Please place your finger on the scanner. Welcome back, Hanisha. Good to see you here again.
This is actually a use case of the Indian biometric program. So someone placed the finger on a scanner, the software system went off to UID, the database that contains all of these records, pull back from it a picture of the person's face and all the demographic data, which can then be used to populate a form that gives them access to a particular service, opening a bank account or whatever it is. So something that you are is the most obvious, because we are humans. I mean, we know who we are, and therefore a measure of who we are as a biometric is the most obvious way of doing identity. However, this requires a huge effort, right? I mean, the government of India spent 5 years and a lot of money to enroll 600 million people, 700 million people into a biometric program. There are other ways of identity which do not require biometrics, and Denise talked about it, everybody talks about it, right? You have documents. This documentation is provided to you simply by virtue of being a human being, again, by virtue of being a citizen or a resident or whatever it is. You get some kind of a document, some kind of an ID card. When we saw that sort of sexy video with Tom Cruise in it, we saw these machines looking at you and having the ability to see you. And as Abhishek mentioned, modern day gadgetry, phone, a computer, they all have eyes, right? They all have cameras. So machine vision can be used to go to the next level to be able to determine an identity card or our identity document, read it automatically, extract data from it, and to determine its validity. And this is the next video that I'll show you right here.
Human face found. Valid document number. Valid date of birth. Document is not expired.
It's a Brazilian ID card, by the way.
Human face found. ID document template found. Invalid document number. Invalid expiry date. Check digit failed.
So the Brazilian was trying to scam the system, right? Anyway, so the point is, machine vision, computer vision is a very powerful tool that can be, and Abhishek talked about, everyone talked about agent authentication versus bank authentication of an ID. Why should it be any different? What, the banker has special eyes? The banker has what, chips in his head. How does he know that this is a real ID versus the agent? Don't leave it to the human, is my point. I mean, why would you leave it to the human? Let the machine do the work, right? So we showed you two examples of technology used for KYC validation for something that you are, a biometric, something that you have, an ID document, something that the third factor is something that you know. Now that seems trivial and often is overlooked because something that you know can't be really very useful, right? I mean, because I know it, someone else could know it just as easily. My name, for example, or my social security number in the United States, or in various countries you have some number identifying you. However, something that you know has multiple levels to it. So rather than talking about something that you know as simply being your name, address, I'm going to show you an example of technology that can be used to determine something that you know, and maybe it's even someone that you know, right? So the idea of KYC using social networking. Now, when we say social networking, we immediately think about Facebook and Twitter and things like that, which are obvious large social networks. But the social network that predates Facebook and Twitter is email, right? And email is a social network because it represents people that you know, people that you communicate with, people that you either send or receive emails from, people that you forward emails from. So in the next example, I'm going to show you the use of analytics. Analytics is a rather fancy way of saying that this is a rich database with rich information in it that allows you to in real time extract connections between entities that represent nodes in your information set. So in this case, we are going to use a Gmail as so imagine that you're trying to validate someone's identity, and to validate this identity, all you need to do is to ask them to enter in their Gmail username and password, right? by virtue of which I get access to their Gmail account, and by virtue of getting access to the Gmail account, I can map their mail usage using a modern analytics database, which will tell me that who are the nodes of people that actually know this person, right? So if someone is claiming to be me, then the likelihood that someone claiming to be me will not have an email interacted connection with my wife is improbable. Let me put it that way, right? So this is actually my wife's, oh, what happened? It's not showing my screen. Okay. So you missed all the fancy part where the nodes were created, but that's okay. The point is that this represents my wife's email behavior, and each of these nodes, the larger the node, it represents a more frequent interaction between my wife and that person. So I find the largest node, luckily for me, it's me, and then I can see that, okay, here are all the persons that are connected to me or to my wife through me, right? So this is a very simple representation of an analytics representation of interactions through social media, right? And this can be done, where people are prevalently using email or Facebook or things like that. The first step is to determine whether this person is actually connected to the people they claim to be. The second step is then to do almost like an evaluation of what are the things that someone is saying about somebody, like the equivalent of a credit evaluation in the real world, right? So these are three things that are interesting from a technology perspective, and being a technologist, that's all I really care about. But in the real world, there are other things that are interesting, I'm sure. But identity validation is something that you know, something that you have, something that you are, and there are very interesting and real ways of validating all these three things pretty much in real time, and these are available today, these are being used all across the world. So therefore, my final slide, if I can get out of this again. Again, besides the point is that the technology is out there, use it, find it, and use it to build your distributions. Thank you very much.
Thank you, Ashim. I have a question about the point that was raised earlier about why do we need to differentiate between KYC measures that were taken by an agent and the same that were taken by a bank employee. So from your experience, how did you invest in the training and the capacity building of your agents to be able to take on this role, this important role of
Well, a lot of integrity of data. Getting into this, we completely knew that we couldn't depend on the integrity of data, which we were getting from the agents. Nevertheless, we do have a training program for the agents where we tell them how they should collect information from the customers. And as Denise pointed out in her presentation, a lot of IDs are not verifiable. That's the biggest challenge. Fortunately, with this UID infrastructure which has come in the country, they have created interfaces where the ID can be verified. So we do train the agents. The process so far has been that the customer who walks in has to give a picture plus a proof of address and a proof of identity. And what we do is that we pass on the responsibility of the agent, where the agent takes a photocopy of all of this, gets it attested by the customer, and also puts his stamp and signature. So that kind of does transfer some kind of liability or responsibility to the agent. But we also understand that that will not hold very strongly if in case a certain incident does happen. Because ultimately, as far as the law is concerned, the responsibility lies with the bank. So what we do is that we augment that we started to augment that with sample checks. And thankfully for us, it was this particular incident which happened with the drugs trafficking transaction, where the payment happened through ECHO, where we have started to create something what Ashim just presented on his slide. So because there is KYC on at least one end, we are able to create these correlations between the sender, recipient, and the agent. And looking at that data, we are able to conclude a lot, including that where transactions have breached thresholds of AML.
Denise, based on the 2013 new regulation allowing for e-money accounts and for non-banks to issue e-money and open these accounts, what were the measures that the central bank, as a regulator and as a supervisor, to guarantee that proper KYC measures, or at least the least possible needed KYC measures, are taken by the agents of the service providers?
First of all, we don't guarantee anything. We don't guarantee that the financial institutions will behave as the way we want it. It's the same with the non-banks. We didn't change anything in the regulation, so we just created a new type of account that can be issued by non-banks too, and banks can also issue that. The agent network is already there. You said something very important. Leave the least you can to the human error possibility. So rely on data, rely on monitoring. Monitoring systems are, from the central bank's point of view, this is really key. And then we limited the amounts. So the systems of the financial institutions dealing with those accounts need to behave within those limits that we imposed. I think that the combination of these things, if you look, each one is very simple, but they together, I think it's a strong framework. I think money laundering will continue to happen, but it usually happens when there is fraud involved. So someone inside financial institutions, so there is a will to do money laundering. So I think that's the most complicated cases for financial supervisors, is when there is will to do to behave badly inside institutions. But for the most, the majority of the transactions, limiting the value, limiting the action of the agent, and knowing the agent, because the institutions need to do due diligence of the agents, I think it's enough.
Yeah, I'll second the point around knowing of the agent. So we learned a few hard lessons, and we now have a very strong agent KYC process. And that process and the sensitization of agents of why we are doing a strong KYC for them also sends the right message for them not to encourage wrong behavior, and for us to allow for lot lower KYC barriers for the end consumers to come onto the system. So instead of having a lot of KYC weightage on the consumer, shift it onto the agent. Make sure that fellow has enough, has heavy enough anchors not to run away. And when you give that messaging in the KYC process, it sends a very right messaging to the agent network.
Yes, and one final point that I would like to point, that technology is very important because it really can help in uncovering suspicious transactions, and so it's better to be within the system to monitor that instead of outside the system. Yes, please.
I think the point as a technologist, and perhaps this is a little self-serving, but I always like to make the point that ECHO, for example, Abhishek said, that they built all this technology and they're building all this analytics and all of that. But, and many of you do the same thing, right? Building technology is, it's almost like a hobby. But it is just that. I mean, you don't make your own paper, you don't make your own pencils, but you use them a lot. You don't make your own electricity, right? But you feel that you can make your own technology. And I think it's something that you need to, people who can make distributions, people who can make technology, people who can make regulation can make regulations. And the fact, I think we should avoid or risk, sort of try to fight the temptation to be able to build everything ourselves. You don't build your own email servers anymore. You don't build the web anymore. You don't build, social networks anymore. The people out there doing it, let them do it, use it. And that's as a technologist, that would be my advice to people who are trying to build businesses, is don't build technology.
Thank you. Any questions? Yes, please.
Hi, Mohammed Saban, Commercial International Bank. First of all, thank you guys for coming over. And I believe with the fast pace of the agent modeling for offering financial service, KYC is a critical subject for all of us. My question for Echo, given the fact that India, one of the top 5 countries in the world receiving inward remittance, and with the current circumstances of the terrorist act, anti-money laundering, and you guys are, first of all, are you supporting the receiving of the international remittance over a wallet? And the second question is, are you doing a second level of a check specifically for the inward remittance, or you are dealing with the transaction as a local transaction? Same KYC process, same validation.
Thanks a lot for the question. ECHO does not participate in international remittance directly. We are infrastructure, we are an alternate channel, or you can imagine that just as banks have ATM branches and then they have an orbit of ATMs, we are orbit of human ATMs for a bank. In India, the banks are allowed for inward remittances, and additionally, agencies such as Western Union is allowed. What we do is that we extend our infrastructure to such agencies for cash out purposes or for further transferring it into a particular bank account. So as far as our KYC is concerned, we always make sure that one side of the KYC has been done, at least one side, because that's what the central bank mandates. So if the money is getting to an account, then we are not bothered because the account already is issued when the KYC is done. The other is when a cash out is done, then we need to make sure that the money where it is coming from, the KYC is done. So we will always rely on Western Union or the banks to tell us that has the KYC been done or not. If in case the KYC is not done, we don't really do KYC for the customers again, but we absolutely deliver the notifications on their mobile phone. So we make sure that, their cell phone numbers are captured. Because we have been in service for a while, what we have started to do is build a database internally, which means that if that cell phone has ever transacted in the ECHO's ecosystem, then we keep a track of it. And at times the names also get captured. So plus you have now global databases called Truecaller for cell phones. So we have also built mechanisms where you can ping the Truecaller database to find out what's the recipient's name. So again, I mean, technology is changing a lot. If we can figure out disruptive ways to use them, then we will make sure that the objective gets answered, which is to make sure that do we know the person who's receiving the money, or do we know the person who's sending the money? And more or less we are able to do that.
If I may just add, Actually, ID Mission does the KYC for Western Union for inward remittances into India. And as per the Central Bank of India it's fickle at best. It keeps changing its mind. But as of now, it is said that anything under 50,000 rupees in cash requires a KYC for the point of cash out, for the recipient at the point of cash out. So we are in the process of rolling this out across the country, where they're taking a biometric, an actual biometric authenticated with the central repository for every cash out transaction. Now, this is just starting, so it'll take a while to roll out across the country. But also to talk about, we are doing the same in Spain, Italy, and Portugal, where there is no biometric database, but we are doing it using documents like the video showed.
Any more comments or questions? So I have, yes, please.
Alaa Lashin, Alex Bank. So as I understand that the unbanked population in Brazil and Mexico is a little bit high. So when we're talking about 27%, this is only banked, so this is a little bit low. So my question is that how you are facing the obstacle of having the people, because there are a lot of factors for that, but facing the problem of the people, they are resistant to be banked, or they are afraid actually to have a transaction and they have limited money. So is there a specific thing that you do to deal with such thing?
I'm going to speak a little bit about Mexico because I know it a little bit from my previous experience. It's a very low level of access for a country in the income level of Mexico. Mexico is, it's a relatively developed country. It is an emerging economy, such as Brazil, but it should have more financial access by now. They might be facing the same problems that we are facing in Brazil in different levels. In Brazil, we do have much more infrastructure in the financial system than in Mexico. We do have more banks, very strong banks. We have a very well-developed card industry. Some competition. I would say it's a good level of competition in the financial system, but we also have a higher level of financial access. It's about 60% of the adults have an account at a financial institution. But the thing is, we got to a point where things were not moving because we still have those big players. They are very comfortable at where they are. The banks, the card industry, mainly. And the card industry are two companies. You all know who they are. And the large banks. We have about the 10 largest banks. They're very, very comfortable. So the Central Bank of Brazil usually has the policy of not interfering so much in the market. We don't say which kind of products or business models. We don't say that they need to do mobile banking. We don't care. They do what they want, but the market is not moving. So we thought that we needed something else, something that triggers these big players to change their business models to get to the low. So what we did was to allow non-banks to provide other types of accounts to lower level people, but we're going to face something because the problem that we have right now, it's about interoperability of the agent networks. We have around 400,000 agent points in Brazil, but they are dominated by a few players, big players that don't like to move and innovate into the lower income levels. So the central bank is taking the point that the owners of this network, they need to show us how they're going to share the networks to the new entrants in the market, because they need to share. Otherwise, the regulation of e-money is not going to go anywhere. In Mexico, they face the same thing because you have very large players that are very comfortable where they are. And they are the same players. You know, the big card networks, they're the same ones. And Mexico has an additional problem, which is a very dominant mobile operator. that has over 70% of the market. That doesn't happen in Brazil, so the mobile operators in Brazil are weaker than the banks. But in Mexico, it is a very, very, very strong player, and if this player doesn't want to play, nobody goes anywhere.
So that's when you need someone to step in and correct things. Any more comments or questions? Okay, thank you very much. And thank you very much for joining us again. And we'll move on to I think it's time for a break now, right? According to...
Good morning, everyone. It will be short and sweet. Actually, it's very important for us to participate in such an event. And it's something in terms of ease of use, ease of access, inclusion, been hearing all day long, that as a regulator we care about a lot. As you know, EFSA is the non-banking financial service regulator. And we look at, as you can see on the screen, capital markets, mortgage, insurance, factoring, leasing, private pension funds, some specialized government insurance funds, in addition to, hopefully very soon, microfinance. Inclusion is a key word we always think about. And as a regulator, we've been hearing the Central Bank of Brazil, and probably you've heard during previous speeches and interventions. We struggle with the regulatory system and with the laws. Just today, this morning, I was with representatives of the GIZ and some experts. The GIZ is the German International Cooperation Agency. And we had some legal experts, international legal experts in insurance. I was telling them for the past 8 or 9 months, I've been struggling with the term issuing an insurance policy. Issuing, for everybody in Egypt, and the law issued in 1981, means a piece of paper that is printed and signed with an ink pen. I've been trying to push that in travel agencies and in police traffic departments where we get our mandatory insurance policy. Agents can just, press on a button and print a copy of an insurance policy. It doesn't work today. This is an example of how changing the laws and making them smarter with the advancement of technology can help a regulator, can help legislative bodies empower a lot of the things you have all been discussing this morning. Obviously, issues like money laundering rings a bell. I heard now, know your client, and so on. 25 years ago to the day, I was personally proud to be part of the development of the first electronic stock exchange in the Middle East. That was in Saudi Arabia. Remember, this is pre-internet, pre-mobile, pre-satellite TV. And at the time, it was extremely innovative that people sitting all over a country could buy and sell shares directly. Now we take it for granted. I believe if I look at the domain of areas we are regulating, there is lots to be done, as you've heard today, but I'll add a few thoughts, as in installment collection, for mortgage, for even micro-leasing, doctors and clinics and so on, private pension funds. Private pension funds, we have 670 private pension funds with beneficiaries exceeding 4 million Egyptians, and more than over 40 billion Egyptian pounds of money invested in there. They're all over the country. They can't meet in a General Assembly. Paying their contributions is not always easy. So again, all the technology, all the enablement helps. same as factoring, of course, and insurance, especially in life insurance. Always a hassle for me as a citizen who has to pay his premiums and even pay his credit card. And by the way, I think Mr. Basir Rahmi sold me my first credit card in Egypt many years ago. It is the hassle of going and paying. So again, as a regulator, we want to help in that. Even EFSA, as a regulator, gets a lot of payments from the companies it supervises. And if you ask them, it's always a hassle to go to a certain desk in a certain location to pay our fees. So all of that definitely could be enabled by technology. I want to add that technology is not only for payment or information sharing, but it will help also in democracy. And by democracy, I mean wherever we have to vote and decide. It's a general assembly of a company. If you look at the statistics in Egypt, we usually have very little attendance. And it's not only because shareholders are lazy, but they are busy and they are living all over Egypt, and most of our companies are in a certain location, let alone when a company has a factory that is, I don't know, 80 miles in the middle of an industrial zone, very difficult to reach. So democracy is empowered by technology. Voting for General Assembly is a resolution. I think it will change drastically our governance structure. Also, we have, again, private pension funds. Some of our large private pension funds have over 100,000 beneficiaries. Again, remember, these could be working, let's say, in the electricity sector, from Aswan south to Alexandria north, and they'll never be able to gather. So again, empowering them. By the way, our laws allow for electronic voting, I mean in companies and in general assemblies. It has not been implemented. It should be, and it will help empower our shareholders. Microfinance, I know it will be a topic discussed in more details in a few minutes. But again, remember, most of these people have no bank accounts. So a way to get them disperse the small loans they'll get and have them repay their even smaller installments would help a lot. It will provide us even a track record for payment better than papers. I revert back to capital markets. In the stock exchange, one of our regulatory departments investigates complaints and grievances from shareholders and those who trade on the stock exchange. 99% of the problems we have are in paper-based or phone-relayed orders and execution. Technology saves us a lot of hassle because it's safe and you have, let's say, an undeniable trail of actions, instructions, and orders. So again, it helps both parties to have technology. One of the challenges we were facing relating to what we're discussing was signature verification, e-signature. There was a big push to implement it. We believe in it, but we thought our society is not ready yet. It will come gradually. And we always look at the banks. You see Bank Misr on the front row. Once the banks will be able to impose e-signature on their customers, we will have more guts to ask our customers, whether in insurance or in capital markets or others, to have e-signature. It will be useless to have one industry mandating e-signature and having a card there if the user does not feel it's a must. The only way or reason the user will feel it's a must is when he can use 5 or 6 or 7 financial services with that same card. So it will become really a universal access to information. Just to wrap up, again, information access, we've talked about general assemblies, trading alerts and notifications. Yesterday, I was in a meeting with all capital market players discussing our investor protection fund. This is a fund with more than £1 billion to compensate investors when their money is gone, a firm collapses, or some fraud and embezzlement happens. the discussion was that we can prevent a lot of grievances and problems by having the fund preempt risks by just sending email and SMS alerts to those on the stock exchange, notifying them. Early notification solves a lot of problems we see. So again, this is a smart use of technology. Private pension funds we've discussed. Again, most people in private pension funds are not sophisticated to know exactly how much they're entitled to, what they should get. So allowing them access a mini statement online would help a lot. Of course, mortgage payers, leasing balances and microfinance. And obviously, as a regulator, I hope one day, very soon, we should get most of our regulatory filings electronically. Today, it's all paper-based. If we get an Excel spreadsheet attached to an email, that is innovation, which should not be the case. So again, we have a lot to do, and such an event should be hopefully enabling us more. Thank you very much.
Thank you very much, Mr. Sharif. Our next panel discussion is regarding prepaid and micro social products and opening new markets and their new challenges. Our panelists will be Mr. Sharif Sami from EFSA, Mr. Amr Baish from Tanmiya MFI, Ms. Elena Petrova from MetLife Alico, Mr. Basil Rahmi from Alex Bank, and moderated by Mr. Zahir Khoja from MasterCard.
Good afternoon, ladies and gentlemen, and for those of you that are in here, I think you're in for a real treat this afternoon. We have an excellent lineup of panelists here today to talk to us about product innovation and how do we address the base of the pyramid customer in bringing these here. And we've had a number of discussions throughout the day, and I think what you'll find here is that there's a lot of linkages to what we're talking about. And in the marketplace today in Egypt, we are very prime and ready for this to take it to the next level. So I think Mr. Sharif Sami might have left, but I want to thank him for his excellent opening comments. He was, it's very good to see a regulator and a regulatory body in any country that is so supportive of understanding how do we bring solutions to the end consumer in a way that is efficient and effective for them, but also appeases the needs of the other stakeholders in the environment. And those are the people providing the services, and that is also the regulator. And I think he provided a very good example of stock trading, where most of the complaints that they were receiving come from consumers who were trading on paper or via the phone. So there are a lot of advantages for us to really take from some of the key learnings that have already happened in this market and others to really to drive this thing forward. I'd like to introduce the panel that we have today. First of all is Mr. Amr Abush, and he's the Executive Chairman and CEO and co-founder of Tanmiya Micro Enterprise Services, a comprehensive financial service provider for low-income groups through an extensive branch network of 450 branches in Egypt alone. I'm not going to tell you his whole biography, but I'm sure that through his presentation you'll understand the depth of experience that he brings to the discussion today. The next person on our panel today is Ms. Elena Butarova. I hope I said that correctly. My Russian is terrible. And she has over 20 years experience in the insurance industry. She joined MetLife Russia, where she initiated the first bank assurance projects. And again, I think the experience that she brings to this panel today will be very evident. And a lot of the innovation that MetLife has done around the world will be hopefully brought to the Egyptian marketplace with her leadership here as well. And then last but not least, and I think he was informally introduced in the last presentation of being responsible for offering the first credit card to Mr. Samir Sami, is Mr. Basil Rami. And he's the Chief of Retail and SMEs at Alex Bank, a member of Intesa Sao Paulo Group. Prior to his tenure with the bank, he was head of distribution and premier banking with Barclays Bank in Egypt. So without further ado, I would like to offer the microphone and floor to Mr. Amr, who will talk to us about microfinance and the work that his institution is doing here in Egypt.
Good morning, and thank you for giving me the opportunity to be in this session. My name is Amr Abu Aish, Chairman and Co-CEO of Tanmeya Microenterprise Services. I'll just give you a very brief background about what our company does, sort of to support, I guess, the discussions led by Zahir today in this panel. Tanmeya is one of only two private sector companies operating officially as microfinance institutions in Egypt. Our company was established in 2009, and we currently have a vast branch network of 99 branches nationwide. The purpose, besides the slides, there are too many slides here, so I'll just skip through a few things, but I just want to tell you what the concept of the company is. We thought we would go in as a service model whereby we would act as an intermediary between clients and money to actually make sure that this money is delivered in terms of basically micro-enterprise loans and on a more broader sense, act as your high street financial service provider for the low income groups in Egypt. Most of you would know that there is a large gap in the provision of financial services to low-income groups in Egypt. This gap in microenterprise lending alone reaches up to 90% undersupply in the market. Historically that is, banks were not able to reach out to the majority of those clients for a lot of reasons that this may not be the right forum to discuss. However, companies and non-governmental organizations actually were the ones who were able to actually penetrate this market and start delivering services for these groups. As I said, we were established in 2009. My colleague Amr Abulazm is sitting up here in the front row. We're the co-founders of this company, and we were able to attract a private equity group to come in and participate in this unknown field for a lot of investment firms and private equity firms, and a bank. And because the law did not allow us to actually lend directly to clients, we are using bank money to provide for the client. This model works very simply. We exist in low-income neighborhoods that for a lot of Caireans sitting in this room would not know. Okay. And so we're not in Mohandesin or Zamalek or Maadi or downtown or anything. We're in places such as Bayoumi and the likes. I don't know if you know these areas, but a lot of people from Cairo don't know where these areas. And we established shops, and in these places we were able to disperse 1.9 billion Egyptian pounds in the past 5 years in the form of 300,000 loans. These were micro-enterprise loans. I'll show you a picture. We have 99 branches, like I was telling you, and they're widely distributed nationwide, as you can see in the maps. But I want to show you a picture of what our branch looks like. Okay, this is our standard branch, 60 meters to 100 square meters. It's on the high street of any village or town. Usually that's right in front of the microbus terminal that brings people into this village or town or out of this village or town. Standard shop-like format. These branches were set up in a way that would enable us to introduce other financial services that are not normally introduced in these neighborhoods. ATMs are not normally available in these neighborhoods. Money transfer outlets are not normally available in these neighborhoods. Actually, besides informal lending, there is no form of formal funding or financial institution that is usually available in these neighborhoods, and that's our standard look. Technology is an integral component of our business. To manage this large number of clients, we are currently dispersing around 3 million pounds a day of loans every single day of the year. Okay? This year we will be reaching a record of around 2.5 to 3 million pounds, around 700 to 800 million Egyptian pounds. These are short-term loans that range between 4 months and 12 months. They are for entrepreneurs, micro-entrepreneurs to use for their businesses, so they're not personal loans and not consumer loans in any way. And to be able to actually manage the disbursement of these loans, track our loan officers, we have 1,400 employees nationwide. Technology is an essential component for proper tracking, risk monitoring, and ease of disbursement. This is what our product offering looks like. We have two sets of products. We have what we call core products, and we have ancillary products. Our current only existing core product is the micro-enterprise lending, and these are the loans that are ranging between 3,000 pounds and 30,000 Egyptian pounds as a maximum in the tenors I was telling you about, between 4 and 12 months. And these are existing in all of our branches. These are the base upon which we open actually a branch. This is our bread and butter today. We are trying to work on very small enterprise lending. Very small enterprises, as we define them, coexist in the same vicinities as micro-enterprises, so it's a unique opportunity for us to tap on this market. And these loans would take the loan limit up to 200,000 Egyptian pounds. Ancillary services are services that would tie the client to our brand more than make money, I guess. And we are right now in the process of selling a micro-insurance policy. So any walk-in client can actually walk into our branch, pay 25 Egyptian pounds and get insurance coverage for life and disability for a year from one of the insurance companies. So we act as a distributor and a partner to this insurance company. Super Fawry, since we're in a Fawry event, I'll promote Fawry actually. It's a very good product, and this is the payment solutions that I'm sure you've heard and seen outside being described in detail. Our next move is actually to go into electronic payments and prepaid cards, transfers and remittances, and currently we are hosting a few ATMs on behalf of some banks. Just to give you an idea, this is my last slide of our portfolio. Our portfolio outstanding today is actually jumped to 325 million Egyptian pounds. Our issuances is 1.8 billion, it's slightly more now. And our total number of loans issued up to April 2014 was 312,000 loans. And we look forward to your questions furthermore in the panel. Thank you.
Perfect. Thank you, Amr. That was very insightful. I do have a question for you before we move on to the next panelist, and that is, we heard earlier today that a lot of the underserved market don't feel comfortable going into traditional banking because they feel that that is not, the design of a branch perhaps is not something that is meant for them. So what is your institution doing that is welcoming these customers to come in and ask for the different types of products and services that you're offering?
Okay. First, it's working. Okay. A few things. Thanks for the question. A few things. First of all, we have to analyze why clients are slightly intimidated into going into the standard branch of a bank. Okay. They don't feel it is usually overdone for the level of. Okay, and they feel that it is not done for them, so they don't belong. And this is a very strong psychological element here that makes our branches more attractive. Our branches are much simpler, okay? They're always apparent. It's very easy to go in and go out because they look so much like a shop rather than a bank branch. Okay, so you have a lot of shops, not a lot, but a few shops around us that would look nearly the same. It has more like a telecom company branch look, and people are very comfortable now walking into telecom company branches. The other thing is our staff is actually always in the branches recruited from the same neighborhood in which the branch exists. So in order to be able to serve the people of this neighborhood, we recruit from this neighborhood. So that's a predominant, that's sort of a requirement for recruitment in our branches. And accordingly, the language is the same. We may be one country and everything, but the language differs from one neighborhood to the other, from one area of the country to the other. And I guess we like to say it's the relevance of our products to our clients' needs, but then any institution would say that, basically.
Perfect, thank you very much. And we'll have some time to ask Amr a lot more questions after we hear from the other panelists. So now I'd like to introduce Ms. Elena Butarova. And I was very fortunate to be able to have share some dinner with her yesterday and learn a lot about what I thought I knew, and now I realize I didn't, about the insurance industry and specifically the micro-insurance industry. So Elena, if you can share those insights with us, that would be very great.
Okay. Good afternoon to everybody. So I'm really happy to be here. So being a Russian, taking the position of the general manager of insurance company here, it was quite a challenge for me, but I think that the market here in Egypt is a great one. I like Egypt as a country. I like Egyptian people as a very, very friendly, and so really I love them. And I think that this country deserves more in charge of financial inclusion especially. And just a few words about the company I'm working for, and I'm proud to be so. It is MetLife, the company MetLife is a big one, and it is an international company servicing over the 45 countries with over 90 million customers. And it is a life insurance company providing the savings and protection for the people, and mostly it is for a long term. And here in Egypt, we are not just starting. The company exists from 1997, 98. So, and we have here in Egypt, and I'm also proud about this, over 700,000 customers. And I think it's a great achievement. And all this was done mostly using our two major distribution channels, our agency and our corporate solutions, providing the employee benefits. I started my career in Russia and spent then more over 10 years within MetLife, and then I was responsible for several markets in Europe, mostly on bank insurance area. And I saw this in many countries, in many regions, how much important is to have in the consideration different opportunities, how to access to the customer in different segments, in different areas, with different approaches on the segmented approaches based on customer needs and affordability of the products. And here, first of all, I'd like to say that the landscape of the market is very important to consider any financial inclusion programs. And we have to think about the customers. So customers is practically the customer is paying for everything. The customer is paying for nice marmor branches. The customer is paying for all the ATMs. The customer is paying for all the paperwork we do. The customer is paying the salary of all our employees. So thanks customer, we exist. So, and we have, if we would like to approach some customer, we have to understand what the customer really needs, what he trusts for, what if he understands what he is buying, and it's practically also the commitment between the company, any bank or insurance company or microfinance company, to deliver what we have promised. Of course, it's also important service which is available or not, or who is a player on the market, or what products we are offering. And the third, the last but not least, is a regulation. It's a critical point, and I really was pleased to hear Mr. Sherif comments on the new developments, which is great initiatives, and I hope that it will happen soon, because it's very important for everybody, not for the customer only, but also for all the players and for the state, because the state is a social, with a social function to support the people in the case of some difficulties and the problems of health in the older age, etc. It's a quite heavy, heavy pressure, heavy burden for the state to pay for all this. In case financial institutions like insurance, like a bank, like a microfinance organization can help in this, so it is a very, very big benefit for the whole population and for the state itself. And here, I can tell you, I will show with you some experience, some real life examples, how we do this, how we can achieve this, and what steps we do here in Egypt as well, which is helping in this area. And of course, it's very important to have the access to the customer and the infrastructure. How to sell, but also how to serve. Yeah. So one of the examples, which I personally, the project which I started in Russia, and then the question of the panel was not only to talk about successes, but also to talk about the failures. So it's very important to understand what is the key. Okay, we get the access to the very interesting and very nice audience. It is young mothers. In the hospitals in Russia, there is a very good initiative from some producers of goods for mothers and kids. They receive so-called gift package, mother boxes. It is free of charge once the mother submits the information, like for the database, information about the name, the phone, and some data about the child. And they use this to promote their goods. And we got an agreement with this provider of this very, very big program to offer an insurance coverage for children. The idea was great. The mothers, when we offered this program, so the agreement ratio, the pickup ratio was very high. So over 30% of these mothers, they agreed. That's a great package. We would like to have it, but only 3% of them paid. Why? Because it was not convenient for them. Because it required from them to go to the bank or to the post office to pay. And of course, young mothers are very busy. The fathers, when the mother explained to them that it is an insurance program, what insurance program, don't like to spend my money for, and it's practically this project failed. And it was a very big lesson for us to understand not only the product, which is great, but also how you deliver this product and how the customer can keep this product in force and enjoy the benefits, because it was a really, really very good product. So practically, what we have to talk about the education of the customer, the understanding of trends, and the stimulation of the customer to buy a product. The product, what's the product? The product must be understandable, it must be simple, and easy to take. Really easy to take. In other case, if you have to ask a lot of questions, if you send the customer to some other places for specific steps to be done, etc., you lose the customer on the way. So it's very important to do so. Another opportunity is also to see on the broader scope of the market. Today, we are talking about the bank services. We are talking about microfinance services. We are talking about the telcos. But from my experience, which is of course limited, I cannot know anything, so I'm just sharing what I know. It is, the context is much broader. We have a very good cooperation models with our partners like car dealers, like utility service companies, utility providers. We have experience with the post in different countries. So, and retail shops. So practically, we can talk with all our partners and providers of financial services about partnering with different points of access to the customer. Everywhere where is a customer and everywhere where exists or shall be established a payment mechanism is our way to the customer. And I think it's very, very interesting and very important. As for examples, so today this was a presentation from Colombia, for example. In Colombia, we have very interesting project, a successful project with micro entrepreneurs. And they are providing the coverage for life and disability for them. It started not so long away. We have 25,000 customers there. Another project in Colombia is amazing one, and I like it very much. It is the insurance for the customer of utilities. The coverage is bill protection for utility. And there in Colombia only, we have 250,000 customers. The similar project is in Spain with Iberdrola. It's one example. Another example from Russia, which I have created, and so now I'm really proud that this works very well and continues to grow, is the cooperation with car dealers and car producers. It is very nice packages prepared for the customer who are using the financing, so the car loan, covering the debts to the bank, and at the same time the family protection for the car buyer. So it is convenient point of sale, existing payment mechanism, and the opportunity to keep the policy in force. So, and clear, absolutely clear need of the customer also. And another case which I like also very much, it is the experience with the telecom providers. We have done it in many countries, but the huge success, so I don't know why, but Poland in this area shows unbelievable results. We are working with the majority of telecom providers there, and we are offering the different kind of products like bill protector, like health and disability coverage and travel coverage and whatever, different solutions for family protection for the subscribers of mobile operators. In some cases, we are doing in this trilateral agreements, not only the provider of specific service like car dealer or telecom, but we have a third partner, which is a bank. And it helps us to keep the policy in force. The beauty of life insurance is a bit different between the other financial services. We can provide a long-term protection and savings, of course, but for the low-income people, the most important thing is the protection, is that we can provide it for a long term till the customer reaches the age of 65 to 70 years, and it costs, as the colleagues are mentioning, it's not so much, but it is the service and protection which the customer practically in these low segments cannot expect that somebody else can do it in such amount. Of course, I will talk about this a bit later after lunch. I have a presentation. Sorry that I have no presentation now. But the insurance is practically the same model of family support. So the insurance is collecting the money for many customers, a small amount of money, and in case something happened, they pay a big amount. It's like in the Egyptian community, the family is very important, is a crucial part of the social life of the company, of any family and of the state, of society. And insurance practically helps people to keep the good level of life in case of the breadwinner passed away, for example, or is disabled, etc. It is a very important social function, and at the same time, it is also a part of financial inclusion. So the last and not least example, which is a bit different from many cases which I've heard here, and I learned during the previous months here in Egypt, it is very interesting system of financial, it is like microinsurance, like consumer finance in smaller amounts. It's also Poland. They are doing this. Practically, the agent is knocking the door of his neighbors and offering a loan, a short-term, small loan. And the same agent is also collecting the money. So it was very important for this organization and for us to create a right vehicle how to prepare, how to provide the protection for these customers. And we found the right way. The customers are happy. The consumer organization is very satisfied with our cooperation, and we get every month dozens of thousands of customers who are enrolling in this program, and we are able to solve it all. So I think we have a very, very big opportunity here in the Egyptian market, and I will do whatever I can to support this way of financial inclusion. Thank you.
Elena, thank you very much. That was very insightful. I think a couple of key points that were interesting there is financial inclusion and microinsurance, and how do they play into each other. And I appreciate you sharing the example of what was considered to be a product that would go into market and be successful, even after doing focus groups with these mothers, and then only to find out that there was a 3% repayment rate. And so my question to you is, knowing that, how does MetLife now go into market and train and educate these consumers, A, on what is insurance and why do they need it, and B, what are the different channels either that you have in the market or are going to be, or would like to employ in the market for these consumers to participate in repayment, making it convenient for them?
It's very important topics. It's very interesting. I will show the pictures on the presentation after the lunch, but MetLife as an organization started over 100 years ago in US, started with so-called industrial insurance. It means it was very small ticket, so very small price for the insurance, so really retail. It is exactly, it was the first step to the financial inclusion in US, and it was done by MetLife. And a lot of education, including the nursery services, etc. So it was done at that time, in explaining to the customer how important is about the health status, how to keep health in the family, etc. What we are doing now, of course, we are as a commercial organization, it's clear. But at the same time, we know and we understand that we have a very, very big social function. And we do a lot of programs, for example, we started in several countries, and we will start it in Egypt in this autumn. The program called Life Changer. It's a very interesting program where we are not only paying money for something. It's easy. You have funding, you pay. The idea is to engage our employees, engage our agent, all people who are involved in our company, to go out, to go to the schools, to make some specific lessons and discussions with kids in the specific age, 13 to 18 years, not to sell insurance product, no. The goal is to talk to them about finance. What is finance? What is a family budget? How you can use financial tools, how you can make your life more convenient and safe. And we are talking about many things, and we launched this program in 3 countries of Europe, in Portugal and Spain, in Turkey, and it was a huge success. And it was success not only for the kids, but also for our employees, because they are get engaged to the societies, and they feel they are doing really right things.
Perfect. So it sounds like there is investment that is required by a number of stakeholders in order to get people to understand the product and participate in it, and also to encourage the repayments of the products. And we'll hear more about that a little later on. Now I'd like to introduce, last but not least, Basil Rami, who is the Chief of Retail and SME at Alex Bank, and I think he has a short presentation that he'll share with us. Basil, over to you.
Thank you, Zahir. Good evening, everyone, and thank you very much for the lovely invitation. Thanks, Amr and Elena, for the nice presentation. First of all, let me introduce myself and the company where I work with. My name again is Basil, and I work in Alex Bank. Alex Bank used to be one of the largest local banks in Egypt. And after privatization, Intesa Sanpaolo have acquired 80% from Alex Bank, 70%, sorry, and 10% the World Bank, IFC, and the remaining 20% is under the Ministry of Finance. Alex Bank is 200 branches, 1.6 million customers, 9% market share in SMEs, and another 9% market share in retail business, 4% in corporate business. Intesa Sanpaolo is one of the large, because I'm sure that a lot of people in this hall, they don't know about the Italian banks very much, but Intesa Sanpaolo is one of the largest banks in Europe. They have almost 680 billion euro assets, top 5 banks in Europe, and huge experience there, especially in retail business and SMEs. Going quickly, I'm not sure if, can we go? Okay. My first slide here will talk about, I will try to be quick and not to be boring as much as I can, but they asked me to do a presentation. It's about the banks, the banking, who is banking across the world. If you see the first slide, as per McKinsey, half of the world's world's population, they have bank accounts. It varies across the continent. Definitely, the United States is almost 96% or 92%, and in Egypt it goes up to 18.2%. Only 47% of the world's adults are banked. This figures just got it today morning. In the Egyptian banking market, we have 85 million Egyptian populations, and almost from 7.5 to 8 or 8.2 million only are banker. They have bank accounts in the Egyptian economy, and it shows clearly to everyone the potential for the Egyptian banks. We have 39 banks in Egypt. Majority of them are now commercial, and we have a lot of multinational banks in the country. If we see this numbers, there is almost one branch or one network branch per 13,000 customers in Egypt, if we do the math. The financial service, MENA regions with Middle East, North Africa, it shows a great potential to grow in the kingdom of, or the world of the online digital service. The high global penetration, if you see on the slide, it will be Norway, Sweden, and these very advanced countries. In Egypt, we are estimated below than 5% on the digital part. Mobile banking revolution again in 2013. The transfer or the money transfer through the mobile used to be $590 million, and with an estimation of to cross $1 billion in 2017. The online experience between mobile, tablet, and PCs need to be unified and seamless, I guess. With 100% mobile penetration in Egypt, I think it's going to be an ideal to target this population. The next slide. In the developing world, if you can see here, there is a huge number of users across the countries. If we compare, for example, India with 1.2 billion population and Egypt, you will see that only 15% of the Egyptian populations are using the technology, and it differs. And some of them are using only for text message or for take picture or videos, or some of them are using now for use mobile internet. Mobile payments are growing, especially in Egypt for the last period, and across the world from an average from 35 to 40% year on year. We believe that the forecasted and it will reach almost $750 billion by 2017. And if you see the pie there, mainly the money transfer, it shares 71%, merchant purchase 21%, and bill payment 5%, and the other are 3%. Others is, for example, charities and other things. Egypt has approximately 33% internet population. After the 25th of January revolution and the 30th of June revolution, the internet and actually the digital and technology is becoming the growth is becoming very fast in Egypt. 20% of the phone holders use smartphones, growing to up to 40% year on year. Mobile internet users are currently 11.4%. Million, growing rapidly as well. People will go more for digital than to use the digital much more. If you can see also Facebook, Twitter, all of this user is growing very, very fast in Egypt especially in the last 3 years. This is an interesting slide. If you see the businesses here, if we talk about microfinance, small business, and SMEs, there is different channels or a different projects that we can work on to access customers. And also there is different demand from the customer themselves for each segment or across each channels. The microfinance customer will mainly need a mobile cash transfer, mobile cash advance if there is a possibility. We'll use the POS machines as much as I can, or bill payment. Small business, as much as he grow in the business and getting better, so the demand getting also bigger, and the demand for technology getting much more higher for the customers. on the CRM. We believe that CRM is a very important, or customer relationship management system. It's very important for the customer use at the end of the day, because I'll give you a very simple example. Actually, we have the CRM system in Alex Bank currently. So the customer, whenever there is any touch point with the customer from the ATM or even the queuing system, or using the internet, or even facing one of the relationship manager inside the branches, so all data of the customer is on the system, so they understand since when he has opened the account, how many kids he has, what is his income, what products he has, and what kind of product we can sell for him in the future. So it make it easier for the relationship manager inside the branches, or for the customer himself to understand what need he need more for to do better business in the bank. The next one, this is a very quick update where we are now. Currently, we have 320 ATM across the country. We have a fully fledged contact center 24/7 with 160 seats there. Fawry business, we are partner with Fawry, and we believe very much on this company. Actually, we were one of the banks that dealt with Fawry from the early beginning, actually the first bank there, and we have a partnership with them. Western Union business, we have almost 125 branches serving Western Union, 621 POS machines, and we have a free Wi-Fi. And this is again, it's related to the education for the customer. We have provided a free Wi-Fi inside our branches, almost now 82 branches, and the rest will be covered in the next coming 6 months, just to give the luxury for our customer to use the internet for free inside the branches. Some people came and told us, what about the employees? Why they are using the Wi-Fi? Employees will not have the time to use the Wi-Fi, first of all. Second, I don't mind that the employee or the staff show to the customer to teach them how to use the internet banking and how to use their smartphones inside the branch, and also to give them the chance to cross-sell with these customers, and to give the customer the chance to understand better our product and to save time. I believe internet and internet banking is extremely important the next coming period. Yes, currently we have 200 branches across all Egypt, covering all governorates of Egypt. We don't have any single governorate without Alex Bank branch. But I believe very much on technology, because at the end of the day, technology will save time, will save the customer instead of taking a cab or taking his car, driving to the bank with traffic in Cairo is huge, and to find the parking slot, and then to go inside the branch and to stay there, and maybe he's going to get a ticket outside. So it's also economically. So if we use the internet banking, and Central Bank of Egypt honestly have been extremely supportive the last period in this to tackle this new feature for the customers. So it will save a lot of time. I think it is related to the economy, because at the end of the day, the customer can do any banking transaction through the internet if it's a solid one, except withdrawing cash, and he can use one of the ATMs. Also electronic, because Sharif, Sami have mentioned the electronic signature. We have a pilot branch, and this is again one of the shared experience that we got from Intesa Sanpaolo in Italy, that they have some few branches there working with electronic signature, and we have a pilot branch doing that. It was really difficult with the customer to get used to such a feature. But at the end of the day, like Sharif said, I believe the customers, especially the Egyptian customers, they are very quick to learn. They learn quickly. If we have 90 million Egyptian population, and we have almost 95 or 98 million mobile, so they can use anything. And we faced this actually in the ATMs because we didn't want to have a big traffic inside the branches on the counters and to let the customer use our ATMs. So we started at the beginning with some penalties. If he withdraw less than £3,000, he will pay £2 fees. Currently, the number of debit cards have been increased dramatically, more than 50% for the last 2 years. Just that we have teach or educate our customer how to use the ATM, and it's easy to do that. Banking the unbank is one of the mega projects that we have in Alex Bank, and we are working in this project extremely closely with, with Milan team and our colleagues there in Milan. The objective is to transfer as much as we can the unbanked population to be bankers. This will lead to some points. So first of all, you need to educate this customer and to tell him what is a balance, what is your statement, how can he read the statement, and how can he has a checkbook, and when can he has a checkbook, and how to use the checkbook, and to give him a debit card and to use his debit card, and to tell him about all the features that we have, not very sophisticated products, but at least the bottom lines product that he can work with. Alex Bank also has a full-fledged products across everything. We have large corporate, from large corporate up to microfinance business. Microfinance business, we believe very much on microfinance business. Is extremely potential. It's profitable, and it shows that it shows us the dark side of Egypt in a population, that people that need to have or to find a job or to do a job. We have 35,000 customers now in microfinance. They used to have their accounts on an outsourced system, and we have decided 3 years back to put them on our core banking system. And this help us to educate this customer and to tell them that banks are easy to deal with. Having 85 branches across, especially North Africa and Delta, it have helped us a lot to penetrate more, because at the end of the day, I have one single case that a microfinance customer, he became an SME customer right now, not a small business, a mid-cap customer in Alex. It's one case only, but it's potential to have hundreds of cases like this. He starts small, he understands banking products, he understands what he needs exactly, and whenever he shares with the relationship manager his needs, we start to give him the solutions or the financial solution to make him a better customer. So again, technology for unbanking the bank population is extremely important, and we are not focusing only for borrowered customer. We don't want the customer to be only a borrower customer. We transfer them to have a current account, a saving account, a life insurance or a bank assurance product for him and for his family. Alex Bank has launched also a strategic initiative with the group to promote the unbank on 3 levels. Growing our microfinance team to reach 85 branches, over 180 foot on street, or direct sales force. So we are planning to hire another 200 outsource sales force, just to be reachable more in some remote, like Amr was saying. Microfinance business is not in Cairo or in Giza or in Alexandria. Microfinance business is in Delta and Upper Egypt and poor village that we can reach these customers. Also, we have diversified products in terms of loans and, like I said, liabilities across a current account and saving account and checkbooks. And we have some of the pilot branch to maintain the relationship or to transfer this customer from a microfinance customer to a small business customer at the end of the day. So we are taking the initiative to try to grow this customer as much as they can to make them successful in their business life. I will skip those four because I took a long time. Just quickly to tell you about, it's hard sometimes to penetrate the unbanking area or unbanked customers, simply because, again, of the education. You have to exert a lot of effort, and you have to show him that it's not difficult, it's not something, it's not a rocket science. At the end of the day, we have to show it the fast way. So that's why we call it safe, simple, affordable, fast, and definitely educational. So let's skip those four slides just quickly. And the last two slides that I have, we have recently been commissioning some research for our projects and on banking the unbanked populations, and we discovered that the awareness is 15% comparing to 85% of the awareness of providing the service itself. Customers, again, it's not only a matter of putting ads on the newspaper or a TV ad, it's a matter to go on ground with the customer and to educate them in a better way how it is easy or friendly users the internet and the electronic channels. Last slide, which is a wish list that we would like to have, is to unify the nationwide network for mobile payments, central clearing, handling for online transfers, interbank, and this is extremely important because we have now two kind of microfinance business in the country. One of them is under the banks, which is supervised or regulated by Central Bank of Egypt, and the other one is MFI and regularized by the EFSA. So at our end in the bank, we are doing we are checking with the credit bureau or the iScore for all our customer whenever he's asking for a loan. Some of the companies are doing this and others are not doing this. So we don't want at the end of the day to bombard the customer or to inflate the customer with high loans, and then he will reach a point that he cannot pay. So it's very important to have one system, and this system should tell us if this customer have took a loan from any company or any bank. So to give him the chance to pay or to pay his installment in a better way. Also capping on all cash transaction for the government and private transaction up to 5,000. This is a suggestion that we are taking. We should not allow any customer in Egypt to pay more than 5,000 cash. Again, in Italy, and you cannot pay more than 1,000 euro in cash. The rest has been to be paid by debit card or by credit card. This will allow us, or will give us the chance to let our customer being more friendly user of our debit cards and credit cards. I cannot go for example, for a doctor and pay 4,000 Egyptian, 6,000 Egyptian or 7,000. Let him use a credit card and let the doctor or the clinic have a POS machine to make it easier, and it's much more safe. Also, closer integration between EFSA and Central Bank of Egypt entities and reporting credit facility, and that's what I have explained, not to have a double impact on the customer himself. And a national advertising campaign to provide the advantage of being a bankable and mobile banking payments, and to make or educate our customer to be more familiar with electronic payments. Thank you.
Bassel, thank you very much. I think your part of your wish list there can probably be come to life very soon. I think you have a very proactive regulator in this marketplace that is looking to create interoperability, so to have a network solution for M-Payments. So there's a lot of good stuff happening there. One question I have before I just open it up to the audience for you is, when we look at any country that aspires towards success, of course, SMEs are a large part of the development of that country. And financial inclusion doesn't only include the end consumer who is consuming or buying a product from a merchant, but it also involves the SME being involved in wanting to or incentivized to accept a payment in a form factor, a digital form factor from a customer. And what are some of the things that Alex Bank is doing or is looking to do in order to get the SME sector involved in digital financial services?
It will all start again, Zahid, with a product that we can offer. First of all, to the company, if the company needs to get financial facilities and then trade finance businesses. And then we have to refer and we have to go back down to the employees. My always say to the team in the SMEs, we cannot sell a product without interfering with other business like retail or large corporate or thing. So I think having a payroll system for these companies will support them to again to educate more the staff there and to have more privilege to use the banking features.
Okay, thank you. We just want to open it up to the floor if there are any questions for the panelists. There's a gentleman in the middle here.
My name is Tariq Bashir. I'm working in Fawri. I'm interested more to understand the models that support the insurance, the micro insurance for the low-paid labor. I have seen that in Saudi Arabia. I was serving there, and there was a private company supported by the government to allow the taxi drivers who used to be foreigners driving taxis, and it allows them to pay the premium per month, and he's insured as long as he has paid at the beginning of the month, and if he did not pay, he's not insured. So such programs, I believe, is addressing real need for lots of low-paid individuals. And it makes sense that it needs really simple means for paying the premium, as those people were not having bank accounts and they were going to automatic mechanisms to pay their premiums.
I think this question and this example is really great, because it is exactly the key how we can access this market. Just imagine, for example, you would like to provide some insurance product. Let's say some insurance product, and the customer is not eager to pay a huge amount of money. So the pocket of this low-income person is quite limited. If we are talking about the insurance premium, what the customer is paying for his insurance, for protection, it's about 5-10 pounds a month or 2. So can you imagine that the cost of administration of this policy is huge, and something must stay for the insurance protection itself, yes? So here is very important to find out the way how to bring this product to the customer in the most effective way, using whatever partnerships in reality the insurance company can create. You cannot send an agent for him and then collect the money every month. It doesn't make any sense for anybody. It must be a payment mechanism, a payment vehicle. And here we can use different meanings. The best, of course, the best of the best is a credit card, of course. But not in all countries we have this vehicle available. Then we are talking about debit cards or prepaid cards. And we can use a standing order or direct debit to charge in the regular way this small amount of money, and it works. It really works in many, many countries. We have done this. The third option is to use the mobile account with the telecoms, for example. It works as well, very good. And my example, what I've told some from the very beginning, failed? Because of the lack of payment mechanism. So people are eager to pay on a regular basis a small amount of money. And automatically, with each payment, their protection prolongs. It's a great opportunity for everybody. And with the life insurance, there is no need to conclude a new product every year. So you conclude a long-term contract, and the only need what you have to charge the premium. And the customer stays protected. And I think this is a great opportunity for the country, for insurance companies, and for the partners, because if you are using the partner networks and partner services and partners, the customers, of course, we have to put in this triangle of relations, the partner, insurance company, and the customer, right accents. Thank you.
Okay, I think we have literally time for one very short question if there's anything else in the audience. Okay, so I just wanted to conclude by thanking our panelists here for the information. There is a question there? Oh, okay. I take back my thank you. Go ahead.
I'm Iman Ayed from Bank Masr. My question is to Mr. Amr Baish. You said people in this poor neighborhood wouldn't prefer to go to the banks because they thought the banks are not meant to them. Does this have something to do with the regulations? You have more simple regulations at your firm. Another thing that, how do you convince people in this poor neighborhood to use the technology that you are using in your firm? Like using ATMs, etc. Thanks.
Okay, I don't think, I didn't mean to say that we are better than banks, because it's all about the product. I meant that there is a kind of psychological barrier that has to do historically in Egypt with a lot of reasons that would make people more apt to walking into our branches rather than walking into a large granite structure, which is how they perceive the bank branches. Okay, that historically two entities had the big granite structures, bank branches and police stations in Egypt. Yeah, if, that's a client perception. It's based upon survey. The simpler the look is, the more comfortable the client would be. It's like us, if you want to walk into a Cartier shop in Paris, which is very expensive, personally I feel extremely uncomfortable, okay, walking in. Or one of the nice Swiss shops in Switzerland, the watch shops, you know, with the securities and somebody coming to ask you questions before you go in and stuff like that. So it's a matter of comfort zones, and that's the main element. The other thing actually is accessibility. How many branches do you really have in the villages of banks? Not that many. With banks like, especially Bank Misr, Bank of Alexandria, Banque de Caire, and National Bank of Egypt, the branch network is extensive, okay? Yet it is all, there's always the Bank Misr next to the National Bank of Egypt, next to Banque de Caire, okay? But what about the villages? There are not that many branches, so accessibility is the other key element. Talking about technology, we are still not getting our customers to use technology at this point. We are at this stage researching how technology can help customers, and perhaps we were talking in a pre-panel discussion, and before we start introducing anything to our clients, first of all, we are going to start introducing upping our technology use by our other types of clients, which are our employees, 1,400 employees nationwide. And the idea would be to see how technology, which by the way, their average age is 28 years old, okay? To start seeing how technology is helping them as a sample of our clients. And we're also talking that a lot of these are non-banked. Our clients are non-banked, so it's a golden opportunity to introduce new services and products straight on. We're using modern technology rather than having to go through the traditional system and then transforming from the traditional system and going into using new technology. These are people who have never accessed, in majority have never accessed any form of formal financial services. So if you introduce this form of financial service or product right away using technology as the only option, okay, it's more like force feeding in a way, but it's the only option available to access the service. There, I think there's a very high chance that technology will spread and they will be able to use it. One last comment very quickly is, regardless of literacy and illiteracy levels, it is for me it was surprising and impressive to see how well people are using mobile devices, mobile apps, and accessing internet nationwide in very low-income neighborhoods, in very remote areas of the country, so long as there is a network signal there. So strategy here has to be extremely careful on how to do that, but I think in majority, a lot of Egyptians, especially the youth segment or those under the age of 35, are very ready to actually use technology to access services.
Great. So we're out of time. In fact, we're at negative time right now. So I'm going to wrap up by thanking our panelists here. Thank you guys very much for a very insightful discussion. One question I asked them, and I wanted them to address, which we didn't have time to do, which is, can you give me your vision for Egypt in 2020? And if I can summarize the three answers that I got from the panelists, which is, we want customers in Egypt to be able to use any device that they want, to pay where they want, and to pay when they want. And I think we are on the road to seeing that in Egypt today. And again, I can't stress how important it is that you have a very proactive regulator in this marketplace, and you have partners who want to work together and interoperate with each other. So I think we're on that road to success, and we may even see Egypt 2020 a lot sooner than what we discussed earlier today. So thank you very much all for your time today.
Thank you, Mr. Dahir. Thank you very much. So we're going to have the 30 minutes lunch break, and we'll be back here at 3.